Hello and welcome to another episode of the Forex Form Guide. I've called this one Once More Unto the Breach. If you've been following the channel for a while, you'll know that I'm stalking this September crash on the Australian dollar US dollar and that I have been doing so for the last couple of weeks. It's been a little bit challenging, mainly due to the mostly sideways nature of the market, and there's been a couple of opportunities come and go, but the market has stubbornly held in there. Well, I think what we've seen on Friday night is the top coming in, and I'll show you my reasoning for that and what I think is coming next. Before I do that though, if you're new to the channel, welcome. It's fantastic to have you here. I've got a playlist just for you at the top of the channel, and if you find some value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. It does help me to push these videos and Gann's teachings out to more people. Before we get started, a quick disclaimer: this video is for educational and informational purposes only and should not be considered financial investment or trading advice. Bottom line, you can see there, do your own research, trade responsibly. So let's have a look at the Australian dollar US dollar. As I discussed in last week's episode, I did put out this forecast in December of last year, where I said I believe we will see a major crash on the Australian dollar during the month of September 2025. These are the sorts of moves that you get a few times each decade, so they don't come all that often. We actually had one last year on the Australian dollar. It's this one here. This was on a smaller law of vibration cycle running down there. And as you can see, look, 500-point move. It's not the most exciting move the Aussie dollar has ever seen, but it's the nature of the move. It's just down, 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 with very little in the way of rallies. And that's what I'm looking for in September on the Australian dollar US dollar, but from a bigger picture cycle. So I'm excited about the move. I'm looking forward to trading it. It's just taking a slightly longer period of time to get here than I thought it would. In terms of the cycle dates that I'm watching, the large cycle high that I had was the 31st of August. Now, being a bigger picture cycle, we can have orb on this of up to about 7 days at most, which means that the turn could come in a little earlier, could come in a little bit later. Now, out of that large cycle high, as I said, I expect a strong down move, as I've just shown you. But because of the orb on these bigger picture cycles, my preferred method is to tie these dates into smaller cycles. So looking at my smaller cycle, this 31st of August, I had the dates 27 August or 6th September. And I think that what we've seen on Friday night, which was the 5th of September, I think that we have potentially seen a top and that we will see the market run down from there. So here's my chart. You can see on the monthly chart, we had a down bar there for August, and already in September, we have a slightly higher bar for the monthly chart. So if we now turn around and break the low of August, that's a lower top on the monthly chart, and that'll be a great place for the big down move to begin. As I mentioned last week, I think 55 cents is a good target for this market. And even though I'm expecting the crash to run all of September, it doesn't have to hit 55 cents in September. Early January would be another good place for it to hit. On the weekly chart, you can really see the sideways nature of the year. Other than this spike down and spike up in late March, early April, it's basically been sideways all year, and even more sideways. Look here, May, June, July, August, September, and the Aussie just hasn't been able to break out of there. It does look to me like we are forming that lower top over here and that we are going to run down. The weekly chart disagreed this week, putting in a second week up and slightly higher top there, but it has come and closed back below that top over there. You can see that a little bit more cleanly on the daily chart here, which we're going to explore in a moment. But you can see, looking at the extreme top down to this low here on the 21st of August, the pitch of the move down there, if you swing that up there, you've got a 1/8 line running 1/8 of that pitch, is where we stopped on Friday night. In addition to that, we closed below this top here and below this top over here. Now, if we go higher Monday, Tuesday, say, you've got a double top potentially forming here, or you've got, say, the 75% retracement up here. It could go a little bit higher and still work out. I don't think that's the case, though. I think that we're going to run down, and I think if we can see this low broken over here, I think that we will run down, and that will be the beginning of that really strong down move. Obviously, when you're expecting a big move, you've got to deal with your own nerves and your own psychology. But for me, I've made it a little bit harder on myself by announcing it on the YouTube channel that I'm expecting this. So there is pressure on me with this, and I'm not complaining. I'm trying to do my best to help because I've had some help in the field as well. I know that we all need to help each other move forward and that you do get that help repaid. But it's been a big couple of weeks. And for me, it's just a case on Monday of once more unto the breach. You've just got to show up, look at the market, but try not to look at it all the time. Just keep track of it and see what you can find. So looking at this August low and the run up into early September, we had this big strong run up here. I'm looking for a potential top on the 27th of August. I knew it couldn't come in here because we had this overbalance in price here. And that's where your swing trading and form reading skills can really help you out, because I knew straight away here that we needed to have a run down first before we could put in a top if we were going to get a top down here. Now we had that run down and then we've run up and shot through that level. And you can see over here on the 4-hour chart, we did have that steep run down, a little bit of a pullback, a little double tops here, which you'll see on the hourly chart shortly. And then it started running down. I thought, okay, that's it. And I moved my stops down, got stopped out, and I've just been watching and waiting. I did have one more crack going short here. So I made a profit on this short trade here. I got short up the top there. I called 65.53, the top here, even though it was just a daily swing top, came in at 65.59, so I was only about 6 ticks out from there. So not a bad call, but it was just the daily top there. The run down there, a little tiny bit of profit there. I had a little bit of a crack at the short trade here, but this low here, if you spend some time running some angles and some resistance cards and some ranges, you'll find there was a fair bit of pressure here. So I closed, I was waiting for the market to run up and maybe give a lower top, but I thought that was going to run up, and it did. 65.80, it's a repeat of that range there. And if we go onto the swing charts now, or this is a bar chart with a swing overlay. Firstly, on the weekly chart, again, you can just see how sideways and awful it's been. On the weekly chart, we've now run up 176 ticks, which is a fraction more than our last weekly upswing there. And there you can see that potential false break of that last weekly swing top there. We closed below there. This is the weekly swing up there. So from this low down here, running up 176 ticks there, we had a run up of 92 ticks, which is tiny really for the Australian dollar, a pullback of 44 ticks, a run up of 100 ticks, and then a run down of 79 ticks. So you've got slightly expanding up ranges and then slightly expanding down range there, but still a higher bottom. And then we've run just over 100 ticks up here now. So 3 sections up, as Gann would say, 1, 2, and then 3. This was shaping up as a potential overbalance in price. So running double that range there, didn't quite make it there. Instead ran just a bit past the 150% mark. As I said, I think that's 3 sections up and we're going to run down. I had that date, the 4th, 5th of September. It's a September 5 high. That ties in with my bigger picture cycle date of the 31st of August, being 5 days after that date. So for me, I'll be watching the week ahead and looking to see what happens on Monday and Tuesday, but I'm expecting that market to run down from here. If I'm wrong, well, that's what stop losses are for. So there it is, the September 5 top or question mark top. These are the last couple of weeks that we've seen here. It's been pretty choppy and sideways, a little bit of a run up there, but it's very weak. If you look at the price scale over here, 65 to 66 cents on the Australian dollar is a pretty small move there. That was all of last week's range pretty much, so not a lot to write home about there. If we look on the hourly chart for the week, we did have that top. As I said in last week's episode of the Forex Form Guide, missed it by that much. We just missed the top target of about 65.53 on Friday, and then on Monday we shot up and we did touch that target and just go a little bit through there. It mucked around a little bit on Monday, which wasn't too surprising given that it was a public holiday in the US. And then on Tuesday, it started to warm up and then we shot down with a bang. And I thought, okay, big crash move is coming. The strong trending conditions are here. Then the market shot back up, mucked around sideways, and then came down here. This was a double top on 50% there. So as we started running down there, I could move my stops down there and bank a little bit of profit on the trade there, which was nice. We then ran up here in 2 sections and then had that lower top and started heading down. I thought maybe that we might be heading down from there, and we did, but it ran out. Again, really strong price evidence around here. If you're a safety in the market student, you should be able to pick that up. And then a run up and a first higher bottom there on the hourly chart. So at that point, the market is running up and then you're looking for signs of weakness. We didn't get them. We shot all the way up there to just a little bit past the 65.80 level, but there's again more price pressure there. And then straight after that happened, bang, we had a big down bar there and then a lower top on the hourly, and then we've run down a little bit over here. Before we move on, I just wanted to draw your attention to an interesting comparison between the 2011 market and the current market. If you go back to 2011, you can see we had a high on the 27th of July. This year we had our top on the 24th of July. From there, we ran down to the 9th of August. We had a low on the 5th of August here, the slightly higher bottom here. And then you had that higher bottom there on the 19th of August. We had another turn there on the 22nd of August. And then from there, the market ran up to the 1st of September high, which we actually had our 1st of September high there. A little bit of a pullback, but where the market really started to sell off from was the 9th of September high. We've topped here on the 5th of September. So If you add the days up from the 27th of July to the 9th of September, you're looking at 44 days there in 2011 before the market tanked after putting in its top there. Over here, if you added those 44 days to the 24th of July, you'd get about the 7th of September, which is today. Now, we had that top, as I said, on the Friday. We had 3 sections, 3 daily sections. This is all one weekly swing. 3 daily sections running in there, just taking out that top there. If that's a false break top, there's a bit of harmony going for it there. And again, if we start heading down on Monday, it could really take off quickly, and that could be the beginning of that crash there. Now, if I'm wrong on that, I will probably leave the Aussie dollar until we break out of these lows down here. It's just been too sideways for too long to muck around too much with it. But as I said, I've been watching this area for that big crash move to begin since it was actually late November last year, but I put it up on YouTube in December. So bottom line, I think that top is in. If we run to the upside, I'll be wary looking for a double top there. Interestingly, as you're going to see in a moment on the euro and the pound. So moving on to the British pound now, you can see not much has changed. This week was fairly flat on the pound. It basically closed where it did the week before, as you can see up there, which closed the same as its previous week and the previous week again. So it's been very flat on the pound here. We do have this run up here, 2, 4, 6, 8, 9 trading days up, 2, 4, 6, 8, 10, 12, 14 trading days down. But if you take that range and run it up from there, a repeat of that range, or as some people like to call them, a repeating range or a measured move or a yardstick. There's a few different terms for it by different authors out there. But if we repeat that range up there, we'd be hitting a nice double top with some harmony in there. So if we do go higher on the pound, that 137.86 is a good target to watch there, I think. And if we bust through that, you've got 148, 149 as your next target above that. Interestingly, we've paused right at the halfway point of the range. So from this low up to the top there, that's the projected range. And we've paused right on the halfway there. Now we could turn around and fail from there and run down. And if the Aussie drops like a stone, there's probably a good chance the pound will do something similar. Maybe not quite the same, maybe more. But it should do something similar there. However, if the pound runs up now and breaks through that 50%, because it has paused there, Gann says tops and bottoms become halfway points in the market. So maybe that's our indication that we are running up to a top there at 137.86. Similarly, on the euro US dollar, you do have that target of potential double tops there. A little bit too much time has probably run out for that to run up there, and that could just be a failure there at that 50% milestone. And then from there, you'd expect the market to run down if it does. This has been flat since August, probably even earlier. You could argue it's been flat since April, for example, there. It just hasn't really been going anywhere. But as I said, I expect that it's time, at least for the Australian dollar, to break out of all this sideways rubbish. Speaking of sideways rubbish, welcome back to the US dollar, Japanese yen. And again, another flat sideways week there. You can see on the weekly chart, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks where almost every week the close has been in that very, very tight range there. We've been talking about this for weeks and weeks and weeks. Not much has changed. I still think these triple bottoms are going to be broken and that we'll see the market run down there, break those lows and have a good run on to probably at least 116. I'm going to leave it there, and a few reasons for that. Number one, it's been a big couple of weeks, a draining couple of weeks as well, spending more time looking at the market than I usually would. Secondly, however, I'm also very tired. It's been a few days where I haven't had enough sleep, anywhere near enough sleep. The joys of young children, and I wouldn't swap it for anything else in the world. I'm very lucky. I'm very privileged to have those 2 beautiful kids, but it does tend to drain the energy a bit. So couple that with looking at the Australian dollar and looking for where that turn might come in and listening to the market with the form reading. And again, lack of sleep. My brain is not firing on all cylinders, and it is late Saturday night as I'm recording this. And the other reason, of course, is that it is Father's Day today, and I'll be with my family, and I hope that you're able to catch up with your family as well. So to all the dads on the channel, a very happy Father's Day. I know mums get a lot of raps, and rightly so, but I think dads play an extraordinary role as well. But today is Father's Day, so again, to the dads, you're doing a fantastic job. Keep it up, keep doing what you do best, and keep the dad jokes firing as well. And feel free to drop a dad joke into the comments as well. Again, if you found some value in the video, I'd really appreciate it if you could just click on the like button and leave a comment, and subscribe to the channel if you haven't done so already to keep up to date with the future videos. That's all for this week's episode of the Forex Form Guide. If you have any questions at all, you can leave those in the comments below. Otherwise, let's see what happens in the market this week. Third time pays for all, as Bilbo Baggins said in The Hobbit. And I have a feeling this, the third week of really watching this, might be the one where it all comes together. Regardless of what happens, I'll be discussing it all in next week's episode of the Forex Form Guide at 7 p.m. Sydney time. So until then, I wish you all the best with your trading. Have a fantastic week and see you next Sunday night. Bye for now.